Okay, and when you're going for investment, you are fundamentally selling. And the first rule of sales, Sales 101, is understand the customer. So I've already told you some of the things about the customer. He wants to get his money back in great big buckets. But you have some things you have to do in your interest. So number one, find out whether he has any money at all. There are a lot of people out there who claim to be investors, but if they don't have any money, why waste your time? Okay? Then you have to find out whether or not the money he's got is enough to actually invest now or enough to invest later on. Most companies that take investment need multiple rounds of funding. If the company is going really well, you actually need more money than if it's not doing so well. And you're more likely to get it. A company that's not doing so well but feels desperate for the money is less likely to get follow-on funding. Planning the sequence. So when we invest, one of the first questions we ask is how much more money after us are you going to need? And often the entrepreneurs don't have the answer, so we have to help them figure out the answer. But if they're going to need a $10 million round of investment after us, we probably won't invest because we're not going to be the source of that $10 million round. So unless there's someone waiting in the wings saying, when you bring this business to me and it looks like this, I'll invest $10 million, and we believe them, then it's pretty hard for us to put the first $500,000, $1 million into business because it may just get trapped in there, going nowhere. So that's what it means, one-time investor or follow-on. Is the investor experienced both as an investor but also in your business? So there are a lot of high net worth individuals and they may or may not be out there occasionally engaged in investing in startup businesses. But if they've spent their entire life making money in property or retail or share market and you want to build something different, then you really have to ask yourself how much value will they bring, and even more importantly, how likely are they to invest at all? Because I'll tell you now, most people only invest in what they know. Especially when you're investing your own money. When you're investing somebody else's money, people get a little bit looser. So VCs invest in a lot of things they don't really understand, what bad VCs do, and that's mostly what goes on in Australia. So they don't really understand it, but it's somebody else's money and they're getting paid to do it, so they don't really care that much. But when you're going to people who are directly responsible for money, it's coming out of their own hip pocket, then they will invest in where they feel comfortable taking the risk. So if they don't understand your business, no matter how much they talk to you, the chances are they're not going to invest. So you should feel free to test that assumption with them quite early in the engagement. Look, I'm trying to build the next Facebook. You've made all your money on, you're the second richest family in Australia. You've made all your money in mining and property. Are you going to invest in the next Facebook? Really? Are you really going to come across with the cash for the next Facebook? And judge the answer they give you. If you really think they're not going to do it, then politely disengage. There's no point in wasting your time. I tell you now, raising investment capital for an entrepreneur is the biggest waste of time you'll ever go through. But you have to, well, in some cases, you have to do it. The other big mistake is don't take money from the first person who offers it to you. That's what a lot of these things I'm talking to you are about. It's your business. You get to choose who invests in your business. You choose the wrong person and you're in for a horrible experience. The business will fail. You'll have a terrible life experience. You're much better off going it alone than taking the wrong investor. These are the sorts of questions that can help you try and ferret out whether there's a good fit with the investor. What type of investment? Someone who wants to lend you money is trying to guard against the downside. They're worried about losing their money. Now, as an early stage investor, I have a real problem with debt because if I lend you money, you're an early stage startup, most of the things I invest in are pre-revenue. If you succeed, I'm going to want to convert my debt into equity and go for the ride. And if you don't succeed, you're not going to have the money to pay me back what I lent you, yet alone the interest. So it's a pointless exercise. It creates a very negative relationship between the investor and the entrepreneur. And it's pointless. You're never going anywhere. So be very careful of people who want to lend you money because it's not an investor's a risk-taking mentality, right? It's a loser's mentality. I don't want to lose, so I'm going to protect the downside. Early stage investment should be all about chasing the upside. By the way, this is exactly what I say to investors when I train investors. So it's no secret. This is the way I see the world and the way a lot of successful angels see the world, at least. Understanding what they expect that big bucket to look like is important, and how long they want to wait until they get it. And understanding what role they want to play. And again, we'll come back to that a little bit more. And investment process. Any investor worth their salt can tell you what their own process is. What steps they're going through, how long it will take, and what they expect to do along the way. If they can't tell you, if they're going, well, let's just figure it out, then going back to this, the third bullet point, they probably don't have a lot of experience. Right? So investors should have a process. It may be a simple process, it may be a complex process, you may like it, you may hate it. They should have a process about how they're going to do their investing. So, with all that talk about how you prepare yourself and how you prepare looking for the investor, where is that money? Where can you go? So this is a long shopping list. So I'm going to try and help you understand what some of it is.